In June 1893, a telegraph operator named Samuel Whitcomb sat on the night shift at a station in Toledo, Ohio, logging messages that, according to the official story, shouldn't have existed. The station was small: 2 rooms, a wooden desk, a battery cabinet, spools of wire, a wall clock running 3 minutes slow, and a Morse ticker that had been tapping almost non-stop since 6 in the evening. Toledo wasn't the center of the financial universe. It was a railroad hub, a halfway point between Chicago, Detroit, Cleveland, Pittsburgh, and New York. That's exactly why the messages passed through it. These weren't public telegrams, not holiday greetings, not family updates, not regular commercial orders. These were what they called private wire dispatches, messages sent over lines technically owned by the telegraph company, but essentially dedicated to banks, brokerage houses, railroad syndicates, and grain brokers. Everyday folks couldn't read them. Newspapers couldn't see them. Even most Western Union employees had no clearance to know what was being transmitted across these channels. But the night operator heard everything. The telegraph wasn't like a modern telephone. The message didn't disappear into silence. It had a sound. Every pulse left a rhythm. Every pause mattered. A seasoned operator could hear the text before the ticker tape even finished rolling out of the machine. After 10 years on the job, Samuel Whitcomb could recognize not just the words, but the sender, just by their transmitting style. And that night, according to his own logbook, he realized a financial panic had broken out days before the newspapers ever reported it. Not on the stock exchange, not in the banks, but in the wires. The official history of the panic of 1893 is neat and tidy. Too neat. They tell us it was a classic late 19th century financial meltdown. Over-leveraged railroads, overbuilding, a collapse of confidence in silver, the Treasury's gold reserves drying up, the bankruptcy of the Philadelphia and Reading Railroad, massive capital flight, bank runs, soaring unemployment. All of that is true. But this version skips one question, without which the crisis is impossible to understand. Who found out about the crash first? Because in a financial system, the one who finds out first doesn't just protect themselves. They get the opportunity to sell before the plunge, to buy the dip after the collapse, to freeze out their competitors' credit, to accelerate the bankruptcy of the weak, and to walk away from the catastrophe not as a victim, but stronger than before. A panic isn't just an event. A panic is information asymmetry. And in 1893 America, the information wasn't held by the newspapers, not the government, not the stock exchanges. The information belonged to the wires, and the wires were controlled by Western Union. To understand what Samuel Whitcomb heard that night, you have to understand what the telegraph actually was at the end of the 19th century. In high school history books, it's usually painted as a technological marvel that shrank distances and united the country. Before the telegraph, a message from New York to Chicago took days. After the telegraph, minutes. Business sped up. Newspapers became timely. Families could stay in touch across the continent. America became a single nervous system. It's a beautiful narrative. But the nervous system didn't belong to the body. It belonged to the owner of the wires. By the 1880s, Western Union wasn't just a telegraph company. It was the first national information monopoly in the United States. Its lines ran alongside railroads, fed into banks, stock exchanges, commodities desks, newspaper bullpens, government offices, and brokerages. If money moved, if goods were bought, if a stock was sold, if a train was rerouted, if a harvest was priced, or if a bank called in a loan, There was almost always a Western Union ticker clicking nearby. The company didn't just transmit messages. It saw the architecture of the American economy in real time. It knew which banks were asking for gold. It knew which railroads were delaying payments. It knew which brokers were dumping stock before the bad news hit the press. It knew which cities were starting to hoard cash. It knew where the panic started before the panic even had a name. Today, we call this data. In 1893, it was called telegraph traffic. Samuel Whitcomb wasn't a famous man. He wasn't a reformer, not a politician, not a journalist. He was born in 1856 to a railroad worker's family in northern Ohio. At 14, he started running messages for the local telegraph station. By 17, he was an assistant operator. At 22, he could transmit up to 35 words a minute, a solid professional standard for the era. He was an infrastructure man, the exact kind of guy without whom the system collapses, but whose name never makes it into the history books. Whitcomb kept personal log books, not the official message tapes. Those belonged to the company. He kept his own shift notes, dates, hours, odd routes, line breaks, unusual codes, the names of operators at neighboring stations, repeating signals. Most of these logs were incredibly dull. Technical jottings. Rain damaged the line on the eastern sector. Bad connection on the Chicago circuit. Delay in commercial traffic due to gridlock in New York. But the logbook for June 1893 was different. Whitcomb's logbook didn't survive in a state archive, not in a telecommunications museum, not in Western Union's corporate collection. It surfaced in 1978 during an estate inventory after his granddaughter passed away in Lucas County, Ohio. The box was simply labeled Railroad Papers. Inside were old receipts, 2 photos of the station, a broken telegraph key, and 3 thin notebooks bound in gray covers. One of them covered the period from May to August 1893. At first glance, it looked like a standard work diary, but on the page for June 18th, an entry appears that doesn't look like the rest. Whitcomb writes, "Night Private Wire, New York, Chicago overloaded with messages from houses that don't usually use the western route. Repeated orders to sell Reading, Erie, Northern Pacific. Several messages moving before the official opening of the eastern market. Senders demand no delays and no copying." This entry is crucial not because it shows stocks being sold. Selling stock is business as usual. It's crucial because it lists the exact railroad companies that would find themselves at the dead center of the crash in the weeks to follow. Reading had already collapsed in February, but by the summer of 1893, the crisis began ripping through railroad securities, bank loans, and collateral. Northern Pacific, Union Pacific, Erie, Atchison, Topeka, and Santa Fe. Names that look like bullet points in a dusty finance textbook today were the absolute bedrock of the American industrial economy back then. Railroads weren't just transportation. They were the collateral for bank loans, targets for speculation, tools for real estate development, and the primary way to connect Eastern capital with Western raw materials and land. When railroad paper tanked, everything tanked. Let's pause right here, because this is exactly where the official story usually gets blurry. They tell us markets react to information, but in 1893, there was no single marketplace of information. There were tiers of access. At the very bottom was the everyday citizen. They got their news from the morning or evening paper, depending on their city. Above them was local business. They could send telegrams, but they paid by the word and waited in line. Above them were the newspaper syndicates, which got news bulletins faster, but were still at the mercy of telegraph tariffs and line availability. Above them were the banks and brokers who held standing relationships with the telegraph company. And at the very top were the private wires, dedicated or priority channels, where information moved with virtually zero delay. This wasn't just communication. It was a hierarchy of time. The poor lived in the present day. Middle-tier businesses lived with a delay of a few hours. Newspapers lived with a delay of one publishing cycle. The big financial houses lived in near real time. And the owners of the infrastructure saw everyone else's moves. This is what America's first Internet looked like. Only there was no public access. Western Union completely understood the value of this position. The company was founded earlier, but it seized true power after a ruthless series of mergers and acquisitions. By the 1860s and 1870s, it had become the dominant force in telegraphy. Then came Jay Gould. If there's one figure in American history who understood better than anyone that infrastructure is more valuable than production, it was Jay Gould. He didn't invent the telegraph. He didn't build railroads in the romantic sense of the word. He controlled the bottlenecks. He bought. He squeezed. He consolidated, manipulated stock, weaponized debt. He hostile took over companies using financial mechanisms that were technically legal but practically impossible for the average guy to wrap his head around. Gould understood the golden rule. The telegraph and the railroad weren't two different industries. They were one system. The railroad physically moved the goods. The telegraph moved the information about the goods. Whoever controlled both streams could control the price before anyone else even figured out why the price had changed. This isn't a theory. You can see it in the very geography of the telegraph lines. The wires routinely ran right alongside the train tracks. Easements, stations, repair crews, commercial offices, it was all intertwined. The railroad company gave the telegraph company a right-of-way. The telegraph company gave the railroad operational control. Banks bankrolled both. Brokerages traded the paper of both. Newspapers got their scoops through that very same infrastructure. And when panic strikes a system like that, the question isn't whether someone finds out first. The question is how much first. Whitcomb's log reveals a bizarre sequence of events. June 18th, abnormal gridlock on the private wire. June 19th, repetitive orders to dump railroad paper. June 20th, inquiries from New York demanding confirmation of local bank reserves in Cleveland, Toledo, and Detroit. June 21st, dispatches stamped "No Press." June 22nd, standard commercial traffic gets backlogged because private financial messages are given priority. June 23rd, Whitcomb writes down a phrase the public does not yet know. This phrase is circled in pencil. We don't know exactly who transmitted it. Whitcomb didn't log the full message. Maybe he was afraid. Maybe he didn't have time. Maybe it was part of a coded phrase. But that one line shifts the entire tone of the logbook. The public does not yet know. If this entry is accurate, then a night operator in Toledo sat there listening to financial houses discuss not just the market, but the gaping delta between what they knew and what everyone else knew. In standard history, details like this just vanish. Not necessarily because someone is throwing documents into a fireplace, but because the archival system itself decides what gets deemed important. Corporate ledgers are saved. Bankers' speeches are saved. Annual balance sheets are saved. Newspaper clippings are saved. The scrawled notebooks of night shift operators are not. And yet, it's those exact notebooks that sometimes reveal how the machine actually ran before it spun a narrative to justify itself. The Panic of 1893 was one of the most devastating economic catastrophes in U.S. history. Hundreds of banks permanently shut their doors. Over 15,000 businesses went belly up. Tens of thousands of miles of railroads fell into receivership or were forcefully restructured. In some blue-collar towns, unemployment hit 20%. In 1894, an army of the jobless, famously known as Coxey's Army, marched on Washington demanding federal public works and currency reform. But in the financial hubs, the crisis was also an opportunity. A railroad going bankrupt didn't always mean its physical assets were wiped off the map. The rails stayed, the land rights stayed, the depots stayed, the bridges stayed. What disappeared were the old owners, the small-time bondholders, the local investors, the labor guarantees. After going bust, the road could be reorganized, debts wiped clean, stock zeroed out, the assets scooped up by new syndicates. The crisis effectively washed the property clean, but it didn't wash it clean randomly. It washed it clean for the benefit of whoever had cash, credit, and information at the exact right second. Information was the killer app. In one 1893 letter preserved in the commercial correspondence files of the Chicago Board of Trade, a grain broker complains that freight rates were shifting before local traders even got the memo. He writes that Eastern houses are acting like they read our books before we even close out the day. That line could just be the hyperbole of a frustrated businessman, but if you hold it up next to Whitcomb's logbook, it starts to cast a very different shadow. The Eastern houses weren't reading the books, they were reading the wires. The most important part of this story isn't that Western Union was transmitting messages. That was literally their business. What matters is that the company could see the patterns. One bank firing off an urgent wire is a fluke. 10 banks firing off urgent wires in the same direction within an hour is a signal. One broker dumping railroad paper is a standard trade. 5 brokers tied to the exact same creditors, dumping the exact same paper before the news breaks. That's a fully painted picture. The Telegraph Company saw the macro picture before the individual players even realized they were part of it. Today, we'd call this metadata. In 1893, they didn't have a word for it yet. But just because you don't have a word for something doesn't mean it doesn't hold power. Power often exists long before society figures out the vocabulary to describe it. In July 1893, things went from bad to worse. Banks started restricting withdrawals. Companies delayed payroll. Farmers couldn't get credit against their harvests. Railroad workers were facing mass layoffs. The papers blared about consumer confidence, gold, silver, tariffs, and foreign capital. And all of that was partially true. But almost nobody was writing about the fact that the market was no longer happening to everyone at the same time. Different classes of players were operating in entirely different time zones, and that, arguably, was the true hidden engine of the crisis. When a farmer out in Kansas found out credit had tightened up, that decision had already been locked in days prior in New York. When a rail worker in Ohio learned his company was slashing jobs, its stock had already been unloaded by the guys who caught the signal early. When the local community bank locked its doors, the massive correspondent banks had already managed to pull their capital or hedge their bets. The public experienced the crisis as a sudden ambush. The insiders experienced it as a predictable sequence. And that sequence is exactly what the night operator logged. What happened to Samuel Whitcomb after the summer of 1893 is largely a mystery. His name pops up in Western Union's corporate rosters until November 1893. Then he vanishes. Family records claim he left the Telegraph on account of his nerves. In 1895, he was working as an accountant at a farm equipment warehouse. In 1902, he moved to Indiana. He passed away in 1919. But sandwiched in between those dates is one incredibly weird episode. In December 1893, a short, unsigned blurb runs in the Toledo commercial newspaper. It claims that a former telegraph clerk is alleging that certain financial messages during the recent panic were given priority over commercial and public dispatches in a manner demanding investigation. And that was it. No follow-up, no name dropped, no investigation launched, no official denial from Western Union, no editorial crusade. For a newspaper in that era, that's highly unusual. The press loved a good scandal, especially a monopoly scandal, but the Telegraph was a beast of a different nature. Newspapers absolutely depended on the Telegraph. Their lifeblood, the news itself, came over those very same wires. Their ability to compete hinged on telegraph rates and access. Going to war with the telegraph company meant gambling with your own ability to print the news. An information monopoly didn't need to explicitly censor every article. It just needed to own the pipe the articles flowed through. It's a softer, far more effective form of leverage. After the Panic of 1893, America didn't break up its information monopolies. It doubled down on them. Telegraph companies kept serving the financial markets. Stock tickers became even more essential. Newswire services centralized the flow of information. Banks got bigger. Railroads went through the wringer of reorganization and emerged under the thumb of even more formidable financial giants. By the dawn of the 20th century, a titan like J.P. Morgan didn't just decide whether to bail out a company or let it drown. He could literally coordinate confidence itself, and confidence, at its core, is just information. The panic of 1907 proved this in HD. When the banking system started to crack, it was private financiers, not a government central bank, who sat in a room and decided which institutions would get a lifeline and which would be left to die. But by 1907, the infrastructure of information control was already baked in. The market was conditioned to wait for signals from locked rooms it couldn't enter. And once again, the public found out last. The Federal Reserve System, established in 1913, is usually spun as a solution to the chaos of these banking panics. And, in a way, that's true. But it was also a solution to the problem of coordinating information. Who actually gets to see the reserves? Who tracks the gold flows? Who knows exactly where the credit crunch starts? Who gets the green light to act before the panic hits the front pages? Post-1913, a chunk of that power shifted from shadow networks to an institutionalized monetary system. But the underlying principle didn't vanish. It just put on a suit and became formal. Samuel Whitcomb died a year before radio started rewriting the DNA of mass media. He didn't live to see the consolidation of the telephone system, never saw a financial terminal, never saw 24/7 cable news. He didn't see the server racks in New Jersey, deliberately built right next to the exchange floors just to shave a few microseconds off the signal ping. But he would have understood the logic instantly, because it's the exact same logic, just on steroids. In 2010, the U.S. markets got hammered by the infamous flash crash. In a matter of minutes, the indices plunged and then partially bounced back. The post-mortem explanations were purely technical. Algorithms, liquidity dry-ups, automated market makers, execution speed. But beneath all the jargon was the oldest question in the book: who sees the movement first? High-frequency trading isn't black magic. It's an entire industry built on weaponizing microscopic slivers of time. If your system sees a price, quote, a fraction of a millisecond before the other guys, that fraction of a millisecond is a hard asset. You can monetize it. You can defend it. You can blow millions of dollars on infrastructure just to secure it. That is the exact same telegraph logic of 1893. Only instead of Morse code, it's fiber optics. Instead of a dusty station in Toledo, it's a sterile data center. Instead of Western Union's private wire, it's co-location server access right next to the exchange. Instead of the public does not yet know, the market has already shifted before a human being can even pull up the chart. After Whitcomb's death, his family evidently had no clue what those notebooks really meant. To them, it was just Grandpa's old work stuff. In the 1930s, one of his sons used the blank pages of a different notebook to scribble out some math for a land sale. By the 1950s, the box was banished to the garage. In 1978, it barely survived a house clean-out without getting chucked in the dumpster. If his granddaughter hadn't held on to the old telegraph key as a family keepsake, the logbook would have probably been tossed right along with the grocery receipts and newspaper clippings. This is how the bulk of history gets lost. Not in a blazing fire, not in some grand conspiracy, but in a trash bag, simply because nobody realizes that a tiny, insignificant document is the skeleton key to a massive system. When a local Toledo historian first flipped through the notebooks in 1981, he casually labeled them interesting but highly technical. They were never digitized, never fully published, never added to a university syllabus. A couple of pages were photocopied for a small-town exhibit on the telegraph and the railroads. After that, the notebooks quietly vanished back into private hands. And honestly, that's almost perfectly poetic. A primary document about the delay of vital information ended up being delayed for 100 years itself. The Panic of 1893 wasn't just a financial crisis, it was a flex of a brand new kind of power. Not power over territory, not over a factory floor, not over an army, but power over the sequence of knowledge, over who gets to know first, who finds out second, who finds out last, and who goes to their grave never knowing that the deck was stacked against them from the start. That power hasn't gone anywhere. It has evolved into the core business model of the modern world. Search engines know exactly what people are hunting for before the market ever registers the demand. Payment networks track consumer habits before the official government stats are printed. Shipping giants see global trade slowing down way before the quarterly reports hit. Social platforms spot political tipping points long before Election Day. Financial terminals serve up price action before the retail investor even logs into their brokerage app. And every single time we're told it's just infrastructure, just like the telegraph was just infrastructure. But infrastructure is never truly neutral when the entire lifeblood of a society is pumping through its veins. It becomes the ultimate vantage point, the place where the pulse of society is first observed and immediately monetized. Samuel Whitcomb didn't have the modern buzzwords to articulate all of this. He didn't say metadata. He didn't say information asymmetry. He didn't say infrastructure capitalism. He put it way simpler. The public does not yet know. Sometimes one sentence says it all. Western Union didn't have to engineer a panic to reign over it. It just needed to be sitting exactly where the panic mutated into data. And in June 1893, one operator in Toledo, exhausted, underpaid, hunched under the dim glow of a lamp, listened to that data bleeding through his ticker. He wrote it down. Not to build a court case, not to sell a newspaper scoop, hell, maybe not even for posterity. Simply because his gut told him something in those dispatches was deeply wrong. They were too early, too perfectly coordinated, far too calm for men who were supposedly getting blindsided by a crisis right alongside the rest of the country. A few months later, his name was wiped from the company payroll. Decades later, his notebook was sitting in a cardboard box. A century later, we're still trapped inside the very system he heard taking its first breaths. A system where the wiring gets upgraded, but the golden rule stays exactly the same. The public finds out later. And if that phrase hits a little too close to home, if it sounds like a perfect diagnosis not just of 1893, but of the world we're living in today, then Samuel Whitcomb,